Make hay where the sun shines, or make holidays where the sun shines.
Yeah.
Right, let me share my screen. Let's get into this. Otherwise, we're going to be here forever. I'm not actually going to get any work done. Why is it not working? Right, share screen. That one, share. That's my screen. Right, this is all the stuff from the structure video, so you can see I have actually been doing some work earlier. Right, there we go. Let's get rid of this shit. Right, I've not actually been into the thread yet, so this will be. Right, there's that all out of the way. Let's make that big. Okay, cool. Right, so. Where's that? 13 messages. Bloody hell. A lot of questions in there. Let's put that over there. Okay, so. Where are your take profits? How much percentage do you take at that TP and why? Okay, so I'm going to go through these questions one by one. Let me find you a good example and I'll show you how I'm managing a trade. So. If we are in bearish market conditions, okay, whilst as you'll learn in the video that's about to come out, we pay less attention to the structure, we understand that there is a weight to the bearish side. On that basis, when we get external liquidity sweeps in bearish market conditions, we are pretty happy that that's going to be a relatively decent trade. So where I take my TPs from, I'll do a full video on this later on in the course, as you probably are aware, but where I take my TPs from is really dependent on what kind of trade that I'm taking. For example, if I'm taking a sell in a bearish market condition, I'm going to be taking my TP at a structural point, okay? If I'm taking a buy in bearish market conditions, I'm going to be taking my TP as quickly as possible. So let me just try and find you a good example of a nice pullback. Okay, so we got one there. Where else do we have one? We got one there as well. Just draw on a couple of lines and then I can show you. Okay, so if we are bearish, I'm going to be looking to get into the trade, something like this, using a lower time frame entry, of course. And then typically I'll be taking off my first. Let's use the replay, we can see it easier. I'm going to be taking off my first profit. See if we've got our classic setup. Okay. Oh, as if by magic. Look at that. What have we got on here then? Okay, so we've got a 15-minute ISC there. So that's our 15-minute ISC. Then we get a 5-minute entry with a 5-minute entry. Just it's a hidden MSU there on that one. Does everyone on this call understand hidden MSU? I kind of tried not to go into too much detail about it because I would rather us concentrate on. I think Lou, you coined it quite nicely the other day, a structure MSU. Okay, because I'd like it to be clearer. But does everyone here understand what a hidden MSU is and how it works?
I think it's one which I'm still not quite clear on. Okay,
cool. So look at this candlestick pattern here. Okay, if I literally take this candlestick pattern here, I'm going to draw from this first yellow candle. Okay, you need a really clear understanding of open, high, low, close. So in any candle, you have an open, a high, a low, and a close. Okay, open, high, low, close. That's how a candle is formed. In terms of what it looks like, okay, in terms of kind of structure, open, high, low, close. Okay, and that's ultimately what forms a candle. Let me just draw it on for you so you can see it. Oh shit. That one there. And then last that one there. Okay. So price starts here. So let's say this is a daily candle. The day starts here. We have an initial push up which creates the high. Then we have an initial push down which creates the low. Then we have a pullback which creates the close. That's what forms a candle. So you can see within this one candle you have structure, don't you? Push up, push down, push back up. Okay? And that's what's happening in all of these candles down here. Now, one of the things that I need to get really clear, I'm going to talk about this quite a lot, is my strategy. Any one part of the strategy doesn't work on its own. So you'll go onto YouTube and you'll watch a video about supply and demand, and they'll say when you've got a valid supply zone, if you get a 1 minute chock within a supply zone, you can sell it. And that's why these strategies fail. It's because there's not enough confluences to make that strategy valid and effective. So what I'll teach you over the coming weeks is multiple confluences, 6, 7, 8 different points on a checklist effectively, that will over time filter out average trades. Firstly, that's one really big important thing. But also what they'll do is they will give you a set checklist of things to work through before you can enter a trade, and that combination of things that we're looking for will get you into really high probability, highly effective trades. Okay, so none of these elements work well on their own, which is why hidden MSU is something that I'm not going to bang the drum too much about. I'll talk about it if I've entered off the back of it, but it's something that is a minor confluence, if that makes sense. It's the final piece of the puzzle when everything else is correct for the trade. A full structure MSU, as Lou coined it, a full structure based MSU carries more weight. Does that make sense? Okay, if you've got a structure based MSU that you can really clearly see on the chart like that, okay, that obviously carries more weight than a hidden MSU like this, okay, because there is more structure within this, making it more valid of an area to take a trade from. Okay, and therefore I'm always going to be happier taking a trade on a structure-based MSU. I can, let's say I've got a 60% probability of this trade working out in my head. This is random numbers, okay? 60% chance of the trade probability working out in my head. If I get a structure-based MSU, that might give me the extra 30-40% or the 20-30% I need to make it a 90% success rate trade in my head, okay? Whereas the hidden MSU, because it is hidden and it's on minor structure, the reason why it's less effective is because if I'm looking at hidden MSU, it's going to be available. It's going to be a full MSU, a structure MSU on a lower time frame. Naturally, the lower the time frame you go, the less impact these structures have. So, for example, in this little bit of price action, of course we haven't got the fucking bars. Stupid fucking thing sometimes. See if I can get back to it, guys. 2 seconds. We might only have the 5 minutes.
So like on a 1 minute, you might see structure on a 15-second.
Exactly. Something. Yeah. So if I'm so a 1 minute hidden MSU. Where the fuck is that all gone? 2 seconds.
Yeah. So essentially, it's keep dropping down the time frames, and you'll find the structure somewhere. And I guess the question is, from a validity standpoint to what you're just saying here, is when do you kind of cut the line to say, okay, we're now dropping down to a time frame where the materiality of finding that doesn't count or becomes so low probability that we shouldn't count towards it, and we should wait for a market structure MSU and for a poor structure MSU, and if it doesn't come, then so be it. We don't enter. We don't look for an entry. So it's just where that balance is.
Yeah, I'm with you. If I can find my chart again, I can. What the fuck's happened here? I hate trading views sometimes. It does my head in.
There we go.
Yeah, I would say a 5 minute structure holds a lot more weight than a 15-second structure. You know what I mean?
Yeah, of course. So you can see it quite clearly on. You can see it kind of clearly on here. Okay. Yeah. So within this formation here, okay, what we've got going on, what I'd be looking at is this little section here. Okay, this little section here. This here, or that one there, doesn't really matter. Probably that one because it's got a white candle in, which means it's got more of a bullish push here. Okay, what's effectively happening here, we've got this push down, we've got the close of that candle, we've then got the high of that candle, and the close of that candle, and the high of that candle. If you want to be really accurate, you've got all of these down here, okay? So all of that there, okay, yeah, with me? Okay, based upon those candles. What then we have here, and I won't draw it all out, is you then get a push up, which manipulates that there, okay, in line. You can see where the line is in line, yeah, okay? And then we get the engulfing here, so that there is the line. Then we got the engulfing there, okay? So that is our hidden MSU setup.
Just quickly on that, on the high of the sweep there does not take the high of the high of the white candle. So
and effectively we're looking for a manipulation. It doesn't matter. So that is a clearer one, okay, because it is a white candle. But let's say this was like a 4.5 minute chart, then that section between there might have been a white candle.
Fine,
yeah. You with me? Okay, so it's the structure itself that's important. It's the manipulation and then the continuation. And again, it's what's happening within the candle formations that's most important. Okay, we've got some bearish structure on the very low time frame here, which is then pulled back to the point where it's manipulated, and then after that manipulation, I think at a very low time frame, you've got orders here, haven't you? So in the same way that at these external points we're expecting orders to be filled and therefore to cause a reaction, the same thing is happening here on a fractal level. We've got orders being filled, and then it's that reaction afterwards, the engulfing pattern. It's those combination of factors and combination of structural points that we are focusing on, which is why the MSU works so well. You can get lost, I think, in the reasons why things happen sometimes. For me these days, it's good to understand the reasons why things happen. For me, I kind of fell in love with MSU because it just works. And you'll notice that you find MSU at key areas and it just fucking works. How many times have you got like a trading strategy or an entry single, like a classic SMEC single, and you take it and 50% of the time it doesn't work? You'll notice with MSU, almost every time you find it a key area, it just works. And there's something in that. And again, I think it's because the setup itself is a complicated setup. You've got to have initial bearish structure, you've got to have pullback, you've got to have manipulation, you've then got to have a continuation. So many of these entries, and you see this on Instagram all the time, so many of these entries will just wait for like a push down, break a structure, and then a pullback. And there's no kind of continuation, confirmation. What's great about the MSU is that you've got the engulfing part of it as well. So you're waiting then you're not just waiting, because I think if you traded MSU without the engulfing part of it, it would fail.
Which bit's the engulfing part again, check? It's not that small candle, is it?
That bit there.
On a lower time frame. Oh, the one. Okay, that one there.
Yeah. So again, you sometimes you need to use just kind of common, kind of basic price action. You could use that one if you want. You could wait for an actual engulfing. I know that if I drop down to a different time frame, okay, so you could have used that engulfing pattern. I know that when I see something like that, okay, within there, that candle itself has been engulfed by this candle. So we've actually got a three candle reversal pattern in this example. I'm happy that I would take my trade off that one. I'd be happy with that all day long. Okay.
What about the breaker structure then to the left that signifies, when you get the big push down? Because obviously that's not really visible there, is it?
Which you mean?
As in, we got the ISC candle.
Yeah.
And then there's a push down, but I thought on the push down, ideally you wanted like a breaker structure, and then to the right you've got the MSU.
Yeah, like a change of character, right?
So you got the two white candles.
Yep, but he's using the hidden MSU, so you're not really going to see that breaker structure so clear.
So you've got a breaker structure there. Okay, so that's your initial breaker structure. Okay, if you're using the 5 minute time frame, this here pull down. So I'll show you the structure. Okay, push up, pull back. You got push up, pull back. You got push up. Okay, initial breaker structure, false breaker structure, create an ISC, and now my signal is in. Now I can start looking for trades. Okay, I don't have to have that false breaker structure. It's not absolutely necessary. Okay, and not everything within here is structure. The only structure we care about is structure that has broken structure, if that makes sense. So when we're looking at ranges effectively. So this entire range is one move up because that broke that structure to the left. We then get the pullback here. I'm then not interested until we break structure up here, which would be that one there, that first candle there, because that broke that structure to the left. Then it's that pullback, because that pullback then created, technically that's a structural point as well. Then we've got a pullback, then we've got that breaker structure here, and now we've got our false breaker structure, which SMC traders would be seeing as our first breaker structure and then selling from here. That becomes false there, and that creates the ISC. So you'll notice this a lot of the time below key levels as well. You have this initial push down. I used to fall foul to it all the time. I used to see that initial push down, see that ISC candle there, I'd see an imbalance, and I would, before I traded MSU, I'd take a trade off the back of that, and then it'd be swept up. So, you know, often what we can do is we can wait for the liquidity to be taken first. Wait for the liquidity before you do anything. Wait for liquidity to be taken first before you get into any trade or consider any position. Okay, wait for your liquidity to be taken. That's the first thing that will be taken. From there, this structure's already happened.
But with that one, you're happy that there's a break of structure before liquidity's been taken.
Yes, but I don't necessarily need a break of structure to get into a trade.
Okay.
Okay, I'm happy enough. Because if you're trading off the back of break of structure, you're still trading a structure-based trading strategy. Okay,
very true.
It's
I
not...
just thought it was part of the MSU setup. That was all. That's fine.
So the MSU setup itself doesn't have to break structure. The MSU setup is just purely because, again, this is where we get lost in semantics. Technically, this is breaking these structural points to the left. It depends on what time frame.
Yeah, I was going to say that. Is that kind of what you're considering as well, like you just explained to the other side where, it, you know...
I think, you know, you can get lost in the theory of it sometimes. For me, if I get a clear MSU setup after an external structural point, especially one that's prominent like that, for me, I'm not going to be holding on until I get a clear break of structure. And you can see in this example, you would have fallen foul to it if you had. Okay? Yeah. So once I've got my ISC, which I get here, I get my impulse away from it, I'm happy to enter. Okay, this is on a Thursday as well, so I'm happy to enter on that. This isn't a trade that I take on a Monday. It's probably not a trade I take on a Tuesday either. This is a later in the week trade because we want there to be momentum and volume in the marketplace at this point. So, you know, these sorts of trades, I think we had one, GBPJPY today, wasn't it? I paper traded that entry there. Perfect example. Still liquidity level, okay? We had a push down, no break of structure. This is almost exactly the same scenario. No break of structure, MSU setup, and it failed because Monday is an accumulative day. Typically, it gets stuck in a range and bumbles about. And what we're waiting for is manipulation and then our distribution for the rest of the week. We know that when we've got into the later parts of the week, we know that we've got manipulation, distribution. Okay, the chances are, I'll find my fucking price again. Am I on the right chart? Okay, my replay tool back to here. Okay, so we know by this point in the week that the likelihood is on Thursday we're going to continue on. So where are we? So Thursday, that's all Thursday. So Wednesday, Tuesday, Monday. Okay, so Monday, we've actually had a big reversal this week. So Monday, we've got an accumulation phase. And Tuesday we get a distribution phase. Tuesday onwards, manipulation phase. Tuesday onwards we get our distribution, and then we've had a big old reversal from an external liquidity level. Okay, so for me, what I'd be looking for here is, because that's caused a big reaction, I'll be paying close attention to that high and what reaction we get off the back of it. And as you can see, we get a good entry. So yeah, I'd be taking a second entry if we get that breakdown. Okay, so if you've got that breakdown, break of structure, I'll be taking that second entry all day long. Okay, but if I got a key liquidity area like that one, okay, which would have been something on the daily as well, yeah. So you've got a key, it's a major level as well on 4 hour and higher. For me now, I'm going to be entering off the MSU rejection, and then I'll be taking a second entry usually if we get a break of structure and retest. Okay, in an ideal scenario, yes, we'd have a break of structure, Rob, but liquidity first. If I get my liquidity move, I know an area that I'm likely to go bearish from. You know, I don't need a huge amount of pips. For me, I'm happy if I can take 2R out of it, which I can get on near just about on EPA there. Okay, if I can take my 2R out of it, I'm happy. I've got what I need out of it, and I can take out 50% of my trade, 75% of my trade, and I'm good to go. In this instance, it all worked really, really well. Any other questions on that before we move on to the next question?
No, cheers, mate.
Right, so look. So, Hang on for 1 minute so you don't miss the trade. Take up market executions. The quick way to calculate lot size other than using an FX calculator. No, there's not a quick way to do it. I use an FX calculator. I have one on my phone. I take all my trades from my phone. I am analysis on TradingView. Do all my trades on my phone. The market shouldn't be moving that quickly that you should miss it. Okay, it's not like you were trading the seconds time frame. So let's say I'm eyeing up this trade now. And I'm watching. Oh fuck! I've done it again, dickhead. Stupid fucking thing. Yeah. So let's say I'm eyeing up this trade and I'm watching it. I'll be setting my position. Let's say it's there, for example. I'll be setting my position like that. I'll be getting like that. Right. Okay. I've got 74 pip stop. So I'll go into my app. Okay. Euro USD. And then to my 74 pip stop. 74 pip stop. Okay. So that's 0.16 I'm taking as a trade, and then I'm in the trade pretty much. What I'll do is I'll whack on 2 positions really quickly. I'll then check my stop 1066. I'll go put that into my MT5 and then I'm done. So yeah, I don't have a quick way. I'm sure there may be a quick way. I think you can get some bots that can be attached to your MT5 platform, like EAs they're called, expert advisor.
You can use a trade manager.
That's it, yeah.
Yeah, I'll share a link. So I've got one on MT5 that works on MT4 as well. It's superb. Like, so whether it's short, long, market, limit, stops, whatever you want it, and percentage based on your risk profile and account balance, and yeah, it sits there nicely under the one tap trade thing. So yeah, I can share it if anyone's interested.
Cool. There you go. Get it in the group. Another thing as well, Rob, just come back to your point about I just thought that just looking at these entries, when you are in kind of bearish market conditions, you get external sweeps. It's really hard for price to come up and sweep externally. Okay, coming back to our kind of classic structural moves, you'll usually find that when we're in a downtrend or a heavy downtrend, that they'll take out range liquidity and then continue on. And in those movements, price will obviously move quite a bit slower. When you have external liquidity sweeps in downtrending marketplace, they'll often move quite quickly. If you look at this one and this one and that one, they've all moved really quickly away. So another reason why, if you're trading external liquidity in line with trend, as much as we use trend anyway, the MSU after the sweep is usually sufficient, okay? Because you may not have that opportunity for price to come back, meet your entry. You may have to wait for something like this, or you've had to wait for EPA to form, okay? Or something like this. Again, we've had to wait for a retest of some kind. Then we've got another one there. We start to change direction here. So yeah, the simplest that the strategy can get, external liquidity level in a downtrending marketplace with an MSU, like a 5-minute MSU off an hourly external liquidity point. That's pretty much an A-grade setup, and there's not really much thinking in it. If you're at the right time of day and right time of the week, then that one was taken. When was it? That one was taken at. No bars. We have just been looking at 15-minute chart, haven't we, as well? What is going on? We were looking at 15 minutes, weren't we? No, we were looking at the 5-minute.
Yeah, it's having a funny 5 minutes.
What is going on? We were looking at... is it because I didn't have the replay tool on? That seems weird.
Maybe.
Yeah, so in that one, yeah, it's just outside of my trade, so it's just within. So that looks like a news event anyway, that one. Okay, so that one is 1 o'clock on a Thursday. That's a momentous part of the day. So that would be as simple as the trading strategy gets, and the external level itself is what's caused the reaction. So we're happy to get into that pretty quickly. Right, okay. Go back to the questions. How can we use trading in the zone to take us to the next level? Very funny, Troy. Very, very funny. Oh, he's not here. He's left. He was in here earlier. He's in earlier. Yeah, look, trading in the zone. It's all right. It's all right. It's kind of good. I think I kind of went into it expecting that it's going to be this fucking like holy grail Bible that it's all right. It's just a bit like, yeah, it's good framework on stuff. I think if you're going to make it this far, you've got to be pretty switched on anyway. Do you know what I think it helps? I think it helps dickheads. Do you know what I mean? I think it helps people that have like no clue about anything in life. People that are like currently fucking got a gambling addiction and a drug problem, and you know, it might give them a bit of framework. I don't personally think it's something that you read and become a better trader. And as I've said multiple times, you'll have seen it in my chat, you'll have seen it on my got 10 minutes left, guys. You've seen it on my chat, and you'll have seen it on my my socials. What teaches you confidence and strong mindset in the marketplace is experience with a trading strategy, and that means you've got to write out rules, you've got to learn rules, you've got to adapt rules to your personality and your schedule, and then you've got to take those rules and you've got to test them over and over and over again in live markets. In not live markets, what's the opposite of live? Live? What's the opposite of live? Dead markets. Demo, yeah, demo. You've got to back test it. You've just got to go, and the thing is, I've had this question quite a lot of the time. Be like, oh, I'm just not confident over this, and I don't know what to do here, and I don't. You just need to test it more. It's that simple. If you're ever going through phases where you're unconfident in your strategy or you're second guessing your strategy, for me, sometimes I'll take trades and you guys will be like, well, you know, this could be a reason why it wouldn't work out. This could be a reason why it wouldn't work out. And sometimes that my trades might seem a little bit alien to you because there's these other factors that to you are putting you off trades from. That's maybe from things that you've heard anecdotally off other sources or YouTube. For me, my rules are tested. I know that they work. So if I see my setup, I take my setup. I don't really care about anything else, because if I don't take that and it meets my rules and it wins, then that's much more damaging to me than if I that's much more damaging to me if I don't take it when it has met my criteria. I know that my rules make me profitable. I know that through testing they consistently play out well, and I know that they can normally take me to a small level of profit without too much concern. So sometimes I'll take trades, and I know there's times when you guys have gone and be like, well, what about this, what about this, what about this? And do you know what? You're probably right. There's probably factors, and sometimes those trades will lose. But that's good. That's good, because I know that I'm playing my edge. And that's, you've got to become mechanical in it. You've got to just learn your strategy, and you've got to basically just administer it in the marketplace over and over again. And you've got to learn what works and what doesn't work, and over time, practice and just hard work, dedication. Eventually you get to a point where you consistently make money out of it, and there's nothing more complicated to it than that. I think we're looking for quick fixes all the time. We're looking for books that we can read. We're looking for strategies that we can learn that are going to fix anything. There is no compromise when it comes to hard work in this game. There is no alternative to putting the hours in. It just takes time. And, you know, in the same way that it takes a doctor 7 to 10 years to get really good at cutting people open and stitching them back up, it's going to take you a long time to get really good at opening the charts up and taking pips out of it. You like it?
Nice analogy.
Say again?
Nice analogy.
Thank you. Do I find myself watching the charts? Fucking all the time, mate. I love it. I'm an addict. I'm a full.
What I need to say is I don't know how you work. Like if you're in an office, right, and you've got a chart that you can have a sneak at now and again. It's once you've had that liquidity point hit, and you're like, right, shit, I need to kind of keep an eye on the charts. You can't really set like another alert. I don't think.
Why not?
Well, as in like, where would you set the alert once the high's been taken to then?
Right,
to then have another look again, rather than sit there for like 20-30 minutes staring at the chart waiting for the setup.
Yeah, I do that. I do that all the time. That's just my life. Right, I'll show you. Shit price action last week. Let's use this one. No, that's a shit one because that's news. Let's try and find a good entry. What are we on this Friday? Oh, that one. Like a slow entry, but a successful entry. Okay, cool. So this is a good example down here.
I use the alerts off the crosshairs all the time.
Yeah, these ones.
If you know what I mean.
That one there.
All the way to the right, you can click on it and it'll say set alert.
Yeah, there. You see it?
I mean, I set alerts. I do set alerts and stuff like that. But I'm just wondering if, like say, once the major one's been hit, are you setting loads of little alerts then afterwards and kind of?
Okay, so this is. I'll show you how I'm kind of setting up a trade. Okay, so this is Thursday morning, 21st December, okay, I'm looking at price and I'm wondering where we're going to be going, okay? So I'm looking at the fact that we've probably, if we go to the daily time frame, yeah, we've taken out some key levels here, okay? Key levels here. We've had EPA created there, okay, and we're rejecting and pushing up. And we've changed bullish, okay, so we're now in a bullish market condition, and the range is like this, the range is like that, okay, so the expectation now is that we're going to be pushing higher, okay, at least to one of these levels, maybe get ourselves into premium or hopefully take out the external level. So I'm coming into Asia. Okay, for me, the first thing that I'm doing is I'm going to set an alert top and bottom of Asian range. I'm going to set one alert there, I'm going to set one alert there, and then I'm going to wait until that gets triggered, okay? So I get a trigger there, looking at this and thinking, we've had a bullish push here, we've had a pullback, false breaker structure like that, false breaker structure like that. That level's also taking out liquidity to the left. So I'm not going to be selling into this. In terms of kind of sell side liquidity, my targets are achieved effectively. False breaker structure here. What I'm banking on now is that we're actually going to get a true breaker structure. So I'm not going to be selling into this. We're low in the range as it is, and I'm not going to be selling into that. I'm going to wait for that bottom level to be taken, okay? Now, once that bottom level's been taken, this is when I drop down to the lower time frame, and all I'm doing now is I'm looking for an entry to get into it, okay? So I'd set my alert along here, wait for that to be broken. And then for me now, I want to be getting into an MSU style setup like that. Okay, so this is from 9 o'clock to 9:50. I'll just be keeping an eye on it. I'll have it on my phone. What do you do? What's kind of your day in terms of your day to day, Rob? What's it like?
Well, if I'm in the office, it depends what days. Some days are quiet and there's not too many people sat where I'm sat, so I can kind of get away with having it on my tablet.
Okay, perfect.
And I can just keep, once it's hit a certain level, I can kind of keep checking it. When I'm at home, it's not a problem. I can just have it on another screen and I can just keep checking it as I'm doing my work. It's not a problem. It's just more that when I'm at work, essentially.
Yeah, I think I'm pretty lucky in the respect that I can. Let's see if we get a second entry here. Wait there. Straight out, lovely.
So Robbie, just quick on to how I do it, which is a bit of a cheeky thing, is I basically have the chart set behind whatever screen I've got up. I lower the screen in front by just a tiny bit, so I can actually just see the trading view price, the actual price number above it. So I can't see the chart, but I can see the price right at the top, and obviously no one else is going to see that. And so I know where I've set my alerts, and I know what price it needs to go to, and when it gets to those prices, then I kind of, if I need to scoot off to a meeting room or something like that, and then can do it. But it's only way I can sit there with it constantly there, constantly there. No one else
like that.
I think there's no way of getting away from the fact that there's going to be periods that you have to monitor if you're trading, and this is where maybe the swing trading channel that I'll get going from maybe next month, I think could be quite effective for us, for someone like yourself who's got less time to look at the charts. If you want to be day trading, then there's going to be periods of the day that you need to be keeping an eye. I think the first thing you need to do is you need to look at areas that you want to be looking to be swept. So the Asian ranges are quite good, set alerts, then you can come away from it completely. When you then get your alerts swept, and you're then, this one then is, you're waiting for a setup, you just have to kind of keep checking back as much as you can until you get the setup. Look at all the noise down here though, okay? After the engulfing here, you could have got in anywhere. You had 41 minutes to get into the marketplace, and in fact you actually probably had the best part of an hour. That's not always going to be that way, obviously. Fucking hell, come on, dickhead. You had an hour basically to get into the trade, or it didn't really move very far. So that's something to be aware of as well, is that it will often spend a bit of time down there. It doesn't always, of course. But if you miss that, and you'll see it on my chart. If you look really closely at my entries, sometimes my entries will be like that, and I'll normally put a note saying entered this one a little bit late. It's not the end of the world, okay? Don't don't try and get the perfect entry to the pip so you can get a 6-3, and then if you miss it and you're like, well, now it's a 2 instead of a 6, I'm not going to take it. Fuck that shit. If you can get out of the fucking marketplace a solid 1R more than 50% of the time, you're making money.